And welcome to this wonderful day to talk business. My name is Blyden Ukem and it's Business 360 on Spectrum TV. In today's Business 360, we'll be looking at the key features in the world of business, beginning with outlook from China. And we begin from there. China has accused the US of overreacting after the federal employees were ordered to remove the video app TikTok from government-issued phones. On Monday, the White House gave government agencies 30 days to ensure that employees did not have the Chinese-owned app on federal devices. The order follows similar moves by the EU and Canada in recent weeks. Meanwhile, a spokesperson for China's foreign ministry accused the US of abusing state power to suppress foreign firms. That's the outlook within China. But let's move to the US and Mexico regarding Tesla. Tesla is planning to build a new factory in Mexico, joining other car makers bulking up their presence south of the US border. Mexico President Andrés Manuel López Obrador said the plant for the electric car firm would be in Monterrey, which is about a 3-hour drive from Texas. Tesla is expected to share more in a presentation to investors today. Mexico had previously raised concerns about how water demands from the factory might affect the region, but Mr. López Obrador said they had commitment from Tesla boss Elon Musk to ease those worries. And it seems said that Tesla will build a factory in Mexico. Still within America, but this time South America. Colombia peso leads emerging market losses after cabinet shakeup. The Colombian peso weakened the most in emerging markets, and local bonds dropped as the first cabinet shakeup of President Gustavo Petro's 8-month-old government spooked investors. The peso depreciated 1.6%, the most among 23 major emerging markets, and our currency is tracked by Bloomberg. The yield on peso-denominated government bonds maturing in 2033 rose to 13.36%. Education Minister Alejandro Gaviria left the government on Monday evening as Petro's radical plans to reform the pension and health system alienated key allies. Gaviria had been openly critical of Petro's health care and its bill, which seeks to slash the role of private insurance companies. That's a concern within the country. Let's come back home. The International Monetary Fund has disclosed that only 24% of loans disbursed under the Anchor Borrowers Program of the Central Bank of Nigeria have been repaid. This was contained in the IMF Selected Issues paper on Nigeria, which was prepared by a staff team of the fund as background documentation for the periodic consultation with the country. According to the IMF, agricultural credit in Nigeria has not significantly boosted production, even though there is a challenge of targeting the right recipients for the credits. Still within the country, Nigeria, more companies listed on the Nigerian Exchange Limited have released their final audited report for the 2022 financial year. Nesto, in its financial report, announced a final dividend of 36 Naira 50 kobo per 50 kobo ordinary share. It also earned revenue of 446.8 billion naira, an increase of 27% over the 351.8 billion naira recorded in the previous accounting year. The multinational also declared 48.96 billion naira profit for the year, marking an increase of 22% over the 40 billion naira recorded in 2021. For construction company Lafarge, a final dividend of 200 kobo per unit of 50 kobo ordinary share was announced in the notice signed by the General Counsel and Company Secretary, Mrs. Adewunmi Alode. It would be a good time to look at what is happening in the global economy. The global economic outlook beginning with China's manufacturing index. China manufacturing rebounds. That's the outlook. The CASI China General Manufacturing PMI rose to 51.6 in February 2023 from 49.2 in January, topping market forecast of 50.2 while marking the highest print since May 2021 amid the recent rollback of pandemic curbs. The latest report was also the first increase in factory activity since last July, supported by rises in output, new orders and employment. Meanwhile, sentiment strengthened to a near two-year high. It would be a good time to look at the chart indicating China's manufacturing index. The chart gives different perspectives to manufacturing in the country China. Let's have a look at the chart indicating the manufacturing index in China. Well, while we're waiting for these charts to have a different outlook to what's happened in China and the development in the country, let's look at what's happening in South Africa. South Africa posts larger than expected trade gap. South Africa recorded a trade deficit of 23.1 billion rand in January 2023, larger than market expectations of 10 billion rand, swinging from downwardly revised surplus of 5 billion rand in the prior month. This was the widest monthly trade shortfall since April 2020, as exports slipped 14.4% over a month to a one-year low of 139.4 billion rand, amid sharp reduction in shipment of vehicles and transport equipment, precious metals and stone, machinery and electronics and prepared foodstuff. Top export partners were China with 14.1% of total overseas sales, the US 8.3% and Japan 6%. Meanwhile, import rose 2.9% to 162.4 billion rand as higher purchases of vegetables, original equipment components and chemical products more than offset decreases in those of vehicles and transport equipment and mineral products. The main import partners were China at 22.6% of total purchases, Germany 8.2% and the US 6.9%. The outlook would be that indicating the balance of trade in South Africa. We can have a look at what the chart indicates regarding trade balance amid the deficit in South Africa. While looking at the chart indicating South Africa's trade balance, it's indicative that last year it went up to 16,686 points in billion terms, and even higher as of July 2022, but there was a slowdown also to 24,000 and went even further downward before recovering upward. But when you look at the state in January, the deficit was quite low at this point, getting close or going past 20,000 deficit in billion terms to 23,054, and quite difficult from a South African point of view, indicating a huge deficit between import and export in South Africa. Still looking at South Africa's context, it would be South Africa's unemployment rates. The rate eased to 32.7% in the fourth quarter of 2022, the lowest since the first quarter of 2021, from 32.9% in the prior period. The number of unemployed persons rose by 28,000 to 7.753 million. The employed increased by 169,000 to 15.934 million, and the labor force went up by 197,000 to 23.688 million. The expanded definition of unemployment, which includes those discouraged from seeking work, was 42.6% in the fourth quarter, down from 43.1% in the third quarter. Meanwhile, the youth unemployment rate, measuring job seekers between 15 and 24 years, rose to 61% in the fourth quarter of 2022, up from an over two-year low of 59.6% in the previous period. Let's have a look at the charts representing unemployment rate in South Africa. The unemployment rate in South Africa is indicative of some steep slope, but on the other hand, it started quite high. As of January 2020, Unemployment rate in South Africa was at 30.1%. It dropped in July 2020 to 23.13% and went further upward as of 2021 to 32.5% and 32.6%. As of January 2022, unemployment rate in South Africa went back up to 35.3%, quite huge, but dropping and slowing down as of July 2022 to 33.9%, and this year, January 2023, 32.7%, indicating a slowdown. It would be a good time to look at the commodities and what the market entails. Beginning with the agricultural market, palm oil tops 4,200 Malaysian ringgit. Crude palm oil is vegetable oil and is used primarily in processed food. Indonesia and Malaysia constitute 85% of the world's palm oil supply, followed by Nigeria, Thailand, and Colombia. Malaysian palm oil futures were trading around 4,200 Malaysian ringgit per ton mark, closing in on its highest level since November 2022, buoyed by BRICS export demand, a weaker ringgit, and supply concerns. Exports of Malaysian palm oil products for February 1st to 25th rose between 15.3% and 25.4% from the same week in January, according to cargo surveyors. On top of that, the Malaysian Meteorological Department issued a danger level continuous rain warning across western regions, raising flood risks and sparking concerns about disrupted supplies. Supporting prices further, key markets, India and China, may need to refill their inventories of eligible oil in the coming months. At the same time, any unfavorable weather conditions in India will add concerns about its domestic production. Well, while looking at the events in the commodities market, let's go to metal market commentary with Bob Icino as gold rallies for a second session but closes lower on the month. Bob Icino discusses this.
For 2 consecutive sessions, and today was the best day on a percentage basis for gold since January 19th. On the high today, 1838.60, that was up about 3/4%. On the low, 1810.80, that was down a little bit more than 3/4%, and we finished up around 0.5%, a little bit more than that. Gold bounced at a pretty decent support area. Consider the area to be around 1820. It's not a hard, fast level, but somewhere in that area. So the next few trading days could decide if this is a turnaround or a pause that refreshes in the down move. Now, there was a dollar recovery today. There was some early dollar weakness, and that helped gold early. But as the dollar recovered throughout the session, gold began to come off of its highs. It didn't turn around, go to unchanged, or go to negative, but still came off its highs. And that dollar recovery also was in the midst of yields driving lower from their intraday highs in the US. We also have to look at the euro inflation that was released today, inflation in France and Spain.
Well, talking about dollar recovery, it would make sense to see what the state of metal amid these concerns with the dollar is, because most commodities are exchanging with the dollar. So let's move straight to the metal market to see the price of gold in the live market, as well as the price of other metals such as copper and the rest. The metal market. The metal market this morning has given some solid perspective. Upward movement for gold, 6.13 points upward, a 0.34% appreciation. Current price $1,833 US dollar per ounce for gold. For silver, it's still upward slightly, but not reasonably much, 0.071 point increase, a 0.34% appreciation. Current price $20 US dollars per ounce. For copper, it's the same story, slightly upward. Still, it's moved upward by 32 points this morning. Current price 4,200 Chinese yuan per ton. But iron ore, no reasonable change in the market, as well as lithium. Let's have a look at the energy market this morning, what the perspective is in the live market, the energy market. The energy market this morning has shown some outlook, negative outlook for most of the energy products, beginning with US crude, the WTI crude oil. Current price $76 US dollars per barrel, downward by 0.459 points, a negative 0.6% decline. For Brent, which is Nigeria's price benchmark for crude oil, $82 per barrel, downward by 0.54 points, a negative 0.65% decline. For natural gas, is the same story. Gasoline slightly downward this morning, hitting oil slightly upward, but coal downward by 3.65 points, a negative 1.85% decline. A quick look at the agricultural market this morning. What the agricultural products are saying, talking about wheat, soybeans, lumber, palm oil. Soybeans current price is $1,496 per bushel, upward by 6.25 points, a 0.42% appreciation. For wheat, it's $692 per bushel, upward by a slight 0.89 point, a 0.13% appreciation. For palm oil, it's gone up after hitting that 4,200 Malaysian ringgit per ton mark, upward this morning by 46 points, a 1.11% appreciation, but lumber is appreciating by 1.79% upward movement. For cheese, it's a little here, a little there. It would be a good time to look at the forex market, beginning with the FX market commentary by Dan Deming. Pound rallies for the second session as data shows that inflation is stickier than expected. Let's hear from Dan Deming.
The recent lows of 1.1924, which correspond with the lowest levels here over the last couple of weeks, to trade higher and back into basically a range that's been established here for the last couple of months. 1.2114 is the current price level, and that's just off the intraday highs. And when you look at some of the driving factors, I think the primary driver today appears to be the Bank of England officials' narrative. Several Bank of England governors or officials speaking today, and with that, the message appears to be hawkish in tone, and particularly when they're discussing the inflation pressures, the stickiness of inflation, coupled with the recent data points indicating the economic activity could be shifting higher after several months of trending lower. So I think that that's one of the primary drivers here as to why we are experiencing some upside here for a second day when you look at the British pound futures. Now, looking at the general trends, we are in the lower middle of the range here for 2023. As I mentioned, we held the recent lows here right around 1.192 to trade higher, with the high right around 1.242 for the year. So again, in the lower middle of the range, but it's able to establish some upside here the last couple of days and get back into this range-bound trade that the British pound futures finds itself in. Couple that.
Thank you, Dan Deming. An outlook on British pound. But let's see what the live market is saying this morning regarding the currency pairs and their exchanges, beginning with euro against the US dollar. The euro-US dollar market has shown some sensitivity after hitting 1.05 points. It's gone back up, slightly upward, but the struggle continues for the euro. It's been difficult against the US dollar, upward by 0.00775, a 0.73% appreciation. For the pound against the US dollar, it's a similar struggle, not gaining much, but slight gain this morning, a 0.12% appreciation, hitting back at 1.20 mark for 1.2 US dollar equaling £1. The Aussie also is gaining against the Australian dollar, is gaining against the US dollar, and the New Zealand dollar gaining against the US dollar just slightly. The US dollar also losing to the Japanese yen this morning, but a slight loss this morning. Let's see what's happening regarding Naira. Naira's energy in this morning market against the majors. Against the majors has been a similar story. Market still ranging, no stretch in the market. 459 Naira equaling $1 US as at the close or open of the market this morning. The euro against the Naira is 488. The euro gaining back against the Naira as at the close of yesterday's market. For pounds against the Naira is 556 Naira equaling £1. A 1.56 gain. 4 pounds against the Naira is 0.28% appreciation for the pound. Let's move to the parallel market to see what the energy is in that market, where Naira is facing the rest of the currencies. Dollar to Naira buying rate is 755 and selling rate 752 Naira to $1. For the pounds to Naira, buying rate 935 if you're buying, and selling rate 918 naira to 1 pound. For the euro to naira, buying rate 790 naira to 1 euro and selling rate 775 naira to 1 euro. That's the outlook within it. Let's see what's happening with the cryptocurrency market this morning. The energy with Bitcoin. For the Bitcoin and its other followers, Ether, Binance, Cardano, Solana, Ripple, the top cryptocurrency, there've been that struggle for them, but early morning gains for them after Bitcoin had hit that 25,000 mark, has hit that position 6 times before dropping to 23,000 mark and is going back upward by 589 points this morning. Current price $23,737 for 1 Bitcoin. 2.54% appreciation for Ether is the same story, gaining by 3% appreciation, $1,653 for 1 Ether. The rest of the cryptocurrencies are doing well in the morning market. It's the time to look at what is happening regarding stock market at the close of yesterday's market, the Nigerian stock market. Investors in the Nigerian capital market pockets and gained 260.3 billion naira following the 0.86% rise in equity capitalization at the close of trading yesterday. Consequently, the market capitalization rose from 30.14 trillion naira to 30.4 trillion naira after 5 hours of trading. Let's look at the all-share index. The all-share index rose by 477.84 basis points to close at 55,806.26 points. Investors traded 237.17 million shares valued at 2.5 billion naira in 2,820 deals. The top gainers. MRS led the gainers list with a 3 naira 35 kobo rise in share price, moving from 33 naira 50 kobo to 36 naira 85 kobo per share. The bottom losers. Multivase topped the losers table after shedding 44 kobo to drop from 4 naira 40 kobo to 3 naira 96 kobo per share. A good look at the top volume market. Fidelity Bank led the day's trading with 39.97 million shares valued at 201.97 million naira. That's the outlook of Business 360 this morning. My name is Vladimir Kim. Thank you for watching.